Okay, morning ledges. Only the early birds are here. Only the hardcore traders are here. Everyone else is having a lie in, pepped up by their euro dollar win last night. Now you've got to get after it nice and early. The early bird catches the worm. Unfortunately, euro dollar has tagged its Monday open. I say unfortunately because I was planning a trade there. We'll discuss that when we get onto it properly, but if you remember, I was looking at a breakdown through this level to sell a rounded retest. And if you're looking at this and thinking, aha, so would you have sold there and got caught here? No, because the move was to the weekly open, which has now occurred. So you wouldn't be coming in there. The move's been done. You're looking for the easy trade, and the directional play there has hit its target. So no, you would not have sold there, even if you had been up at fucking 3 a.m. No, you shouldn't have sold there anyway. Hoping no one has. It's easy to look at this and think, wow, I was short up here. That's quite a move, but I took my 1R out of it. I waited for the potential second play, and I didn't get it. That's fine. But obviously, you've got to keep those stats in the back of your mind. You should really keep those stats yourself, but I did give you the 52-week rolling pass probability and the 3-year rolling pass probability for euro dollar. So it is always something that you do want to be aware of. Again, we'll get on to dollar Canadian later in the session, but I have, just in case anything happens before I get to it, got 2 orders in. One to buy, one to sell. We've been over those before, so you should know where they are. Very much doubt that they're going to hit today, but you never know. So I'm just looking at some of the questions before we get right into it. Morning, Tom. Would you say the number of trade opportunities we've had during this EFL has been normal? The number of trade opportunities I've had hasn't been normal. I'm not sure about you, but it hasn't been normal because the first week I was largely concerned with family commitments. So in the first week, just talking about the swing strategy, I had 1 trade. Second week of EFL, I had 4 trades. And we're in the 3rd week now, and I've only had 1 trade. So overall, that's been 6 trades. 4 winners, 2 losers. The losers were almost scratches, but they were technically small losers. We covered those in gold and Euro GBP. Again, just refresh your memory, had a winner in the dollar Canadian, end of the first week of EFL. Didn't call it, but did go over it. And then a nice winner in BTC and gold, and then yesterday in the euro dollar. Yes, at the end of EFL in the last workshop, I'm going to go over how you create a trading plan and a flow chart, and I'm going to set up a new journal with a hypothetical balance and just show you the trades that I've taken, tell you the sorts of things that you could start to think about when you're journaling. So let's just take FX off the screen for now. I'll try and go through as many markets as I can today, and again, I'll keep in the back of my mind that I've had feedback that you guys would like to go through things even if I don't see anything there, because you'd like to know why I don't see anything. And that's fine, we'll do that. But as you've probably noticed in EFL so far, generally I tend to be pretty focused on something, because sometimes there is a clear play that stands out. So if you look at, for example, this week, it has been dollar yen in terms of the clearest directional bias. It was one of the most clearest and obvious directional biases I've seen in a while. When you see something like that, That's got to be your focus. I actually missed that, as I explained last night. But when you see a bias like that, that should be your objective, to focus on that and do your best to get into it if it sets up right. And if you miss it, you've just got to wait for the next opportunity. There'll always be an opportunity coming along, so you can't afford to get FOMO and allow any emotions to dictate the next trade. A lot of people ask me, do you get frustrated when you miss something? Of course I fucking do. Of course I do. I'm not a robot. There is a level of frustration there, and it's okay to be frustrated. We're not trying to be fucking psychopaths that have got no emotions. All you've got to make sure is you don't take that emotion into the next trade. That's all you've got to concentrate on. So you've just got to leave it behind and make sure that when you click the mouse again, it is a great trade, regardless of what happened in the last one. But yeah, of course I get frustrated. Sometimes when I miss a trade, especially when I've planned something like that dollar yen, I have to take a walk, burn off some energy, muttering to myself, "You fucking bitch." And have people walking past me thinking, "Oh my god, who's this weird guy?" But I haven't had a public breakdown since that copper trade, where I cried like a little bitch on the bus after destroying an account. My god, that was back in 2005. I'm never looking at a fucking copper chart again. Again, as I've said before, I encourage you to fill in a daily plan every day. You can see here the plan. You can download this from my website, and I've got all the markets I trade at the bottom. So each one has got their own tab, and then you can look through very quickly and see what is the plan for that market. And again, it's very useful at the end of the day to look back and remind yourself what the plan was and then what you did, because as I've said before, there are a lot of people that have an idea of where price is going, have an idea in their head of what they want to do, and then they get to the end of the day and they've executed very poorly and often in complete opposition to their plan. So I think it's a lot easier when you come back at the end of the day and you see black and white in front of you what you planned at the beginning of the day. And if you've done something counter to that, it smacks you in the face and you're more likely to learn from it. I usually just keep this on my PC, on another window, but you could print it out if you wanted. Let's fill in the plan for Bunds today. So it's Thursday, obviously. It's the 19th of September. In terms of the fundamentals, I usually just put in the major tier 1 data that's coming out rather than listing absolutely everything. And sometimes you see conflicts between a retail calendar like Forex Factory and a more professional calendar like News Squawk. And I do glance at Forex Factory, but the calendar I use is News Squawk, so in terms of figures I get that from there. But today obviously we've got at 12 o'clock big news. It's going to be the interest rate decision for the UK, so we'll have the official bank votes. You'll be able to get this off Forex Factory again. Forecast is 0.27 and the previous was 0.54. And if you're wondering what the fuck that means, it's the number of voters that were voting for a hike, cut or unchanged in the rate. So you'd see that the forecast is 0 voting for a hike, 2 voting for a cut and 7 voting unchanged. And then at the same time we've obviously got the official rate, and that's 5% forecast and obviously 5% previous. And then after that we've got US news at 1:30, which is unemployment claims. Forecast 2:30 and the previous was 2:30 as well. So we're looking unchanged there. And then you've got Philly Fed. I appreciate this might not be the most interesting thing in the world, watching me fucking type out the news, but get used to it, because this is what you need to be doing every single morning. I mean, you can read it off the calendar, but it's nice again to have the whole plan in front of you so you can look back and remind yourself what you specifically did on a day, what news came out on that day, and so on and so forth. Some people are asking me, how do the numbers differ from News Squawk to Forex Factory? If you look, for example, here at Philly Fed, I believe Forex Factory have got minus 0.8 and News Squawk have got minus 1. So there's a little difference there. And then at 3 o'clock, we've got home sales. Previous 3.95 million. Forecast 3.9. Didn't mean to do that. So you can have this all automated. I'm just trying to show you the long way round, because I know not everybody's going to be able to do that. And also, I have taken a very bold step of removing all of the levels from my charts. So I am going in completely fucking blind, and we're just going to draw levels and set up from a blank chart. So this will be fun. Okay, so let's start out with Bund, everybody's favourite market. What I'm looking at here, just so you know, is the December contract on an hourly and a 5 minute, and then over here I've got the continuous futures chart back adjusted. The reason for having the continuous futures chart is obviously if we start to extend above recent highs and lows on the December contract, then I can just see where old levels come in on the continuous chart. You could just have a continuous chart up if you wanted. So, totally blank chart here. And some of you will be looking at that thinking, what the fuck is that? Where's all the data gone? But again, it's because of the December contract. So when I'm marking up a chart, the first thing I'll do is on the weekly time frame, just note down any very obvious levels that appear to me. And we're not going too far back. It's usually going to be a level above market and below market. So the very first thing I'm going to put down would be that level there on the weekly chart, and it's literally just the swing high that was formed from last week. And if you want to annotate it, which I do, you can put WSH, weekly swing high. And that way you know when you're down in the thick of it on an hourly or 5 minute chart what these levels are when price gets near to them. It's just a quick way of reminding yourself. For me, over the years, I've color coded levels, so I know if I'm down on a 5 minute, if I see a red level, I know that's a higher time frame weekly level. I can always go back to the weekly and check what level it is, but I know it's a higher time frame key level. If I see orange, I know it's a daily higher time frame key level. If I see green, then I know this is just an hourly level. It just gives me a quick way of appraising how important the level is that we're coming into. Obviously, if you've made a proper plan, you will know all of this. But remember, I'm watching 20 fucking markets here on all these different screens. So I've got to have a quick way of knowing, especially when things take off over volatile events, where we are in terms of key levels. Are multiple markets hitting key levels at the same time and that kind of thing? So I mark out that high there, and then I will mark out this last swing low as well. WSL, weekly swing low. And again, you can see the old high here that we revisited and then rotated off. And I won't go any further than that on a weekly time frame, but obviously I will be appraised of where we are and is there anything interesting happening in price. Does it look like we've run a prior high and rejected that, or does it look like we've come off a very key level, or we're at a very key level? Then I'll come down to the daily. So the first thing that I see here is these lows that we've broken down from. So yesterday on FOMC we get this thrust candle to the downside. Whenever we get a thrust candle to the downside, I'm looking above market and I'm thinking to myself, where is the last low pre-break? And the low end of the range is obviously here. And because it's a daily, I'm going to put that in orange. So the low end of the range is there, but I'm looking at that and refining it to that low. Why that low? Because that is the very last low pre-break and it's the low of the spike. I attach a lot of importance to the lows of shooting stars spike candles. So there's a very big level in Bund up at 34.69. Oftentimes when you get a spike and you get a thrust candle to the downside, we will come back and revisit that low and rotate off of it. Now, I don't want to flip around too many markets, but let's just quickly pull on dollar yen and again appraise ourselves of what happened here. There was the hammer, which is the reverse of the shooting star, thrust up, pulls back to the hammerhead, makes a new high. Hopefully you remember last night when we were trading somewhere around here, I said usually when you rotate back to the head of a hammer and push up, it will make a new high beyond the high that it originally set, which it's now done in dollar yen. The general idea that's already kind of playing out in the back of my mind is that we could rotate back to this low and then we would think about it making a new low. So going beyond the lowest point that price makes before it gets back here. Now, when does it come back? Does it come back today? Does it come back in a couple of days' time? That's when it gets a little bit more difficult. It often will come back there, and it tends to come back there fairly quickly. But that doesn't give me a directional bias. I'm aware of it, but I'm not coming in here and thinking, right, so I'm really bullish today for us to come back here. No. But I've got that level marked out. Now, I'm also thinking about, since it was a decent down day yesterday, are there any good levels below market? And of course, we've got to be aware that we've got this pullback low here. And when I see a swing low like that, and it is a daily swing low, I also start to think about, is there anything beneath that? Because we know that these can become forcing points and traders could get trapped under them. So is there anything under there that looks attractive? And what I do notice is this candle high. So when we broke down, the pullback high on this day is just underneath that swing low. So that becomes a point of interest. I will label that KPI. So key point of interest. And this is also a KPI, key point of interest. I'm trying to keep the language neutral. We're not putting sell level, buy level, because that can create a bias in your head. But it's definitely a point of interest. It's a point that you've got to watch if price trades into it. So now the chart's starting to shape up a little bit. We've got a point of interest above market, a point of interest below market. The question that I've got to ask myself here is, have I got a bias on the day? Now, a bias is, I'm convinced this is going one way. The answer to this question for me is no, I haven't got a bias on the day. I wouldn't be surprised if it headed all the way back up to test the low of the shooting star. I also wouldn't be surprised if it came down, took out this swing low and reacted from here. That means I've got no bias. Now again, we've discussed before that if you're thinking it could rotate lower from this level, or you think you might be able to pick it up long here, aren't you biased at these levels? Yes, but that's semantics. We're not at those levels. So right now, all I'm concerned about is where price is. Have I got a clear handle on where this is going? If you want to know a good example of a daily bias, we'll go back to dollar yen. When you see that hammer, for me, there is no other way than that is going up. Now, of course, I could have got it wrong, but that's okay. In my head, I need to be able to look at it and say, can I see anywhere else for price to go than this direction? And in dollar yen, I couldn't. It was screaming that it was going to move to the upside, and that's a bias. So here, I'm unbiased. I'm certainly unbiased on the weekly, and now I'm unbiased on the daily. And I have no real expectations for where this is going on the day. Having potential buy-side and sell-side engagement areas doesn't mean I have a clear expectation of whether it's going to hit them or which one it's going to hit first. Would I be surprised if we drifted a little bit higher and then closed around where we are now and didn't engage with either of these areas? No, wouldn't be surprised at all. So that clearly means I've got no expectation for price. I don't want to labour this point too much, but some people might say, well, you could frame a narrative here. You could say, well, it had a big down day yesterday. It's going to potentially come down here, take this low out, react off here, move back to the upside, test the low of the shooting star. Yes, that could happen, but that's not my expectation. I wouldn't be surprised if that happens, but I also wouldn't be surprised if it didn't happen. So again, just throwing up dollar yen on the screen. I mean, this is hilarious because I missed the fucking thing. But, thankfully you saw me call it. But looking at this, there was a very clear bias and an expectation. Remember, it flushed these lows, creates the hammer and the SFP. And when we were discussing it, it was somewhere around here. And the bias is long, and the expectation is we're going to pull back to the low of the day prior to the hammer, and we're going to reverse from there. Whether I get a trade or not depends on whether I see bullish price action, but that's the expectation. There's a very clear bias and a very clear expectation of price. So when you're asking in the questions, Sonny, how do you determine expectations? That's how. I have no problem saying that I've got no expectation for Bund. So what am I putting in the weekly bias at the moment? Neutral. What am I putting in the daily bias? Neutral. What am I putting in expectations for the day? NA. That's going to be key at the end of the day, because it's very easy to come in at the end of the day if you've seen a huge move and think, oh, I saw that coming. Let's say it pushes up higher today and it hits that level. You might think, oh, well, yeah, Tom mentioned that. He did say it was likely to do that. The interesting thing is look what I've written down here. I'm neutral and I've got no expectations. So if it goes up there, fine, it will be interesting and I'll have a potential area to engage at, but I'm not expecting it. Expectation means I have to be concrete. This is going up, let's get on board. It's as clear as day, and it's not. So let's come down and now put this on the hourly time frame. Now let's look at the levels above market. This level above market has a problem already, and you can probably see what that problem is, which is that if it rotates from there, you've got this in the way. Now you might be able to frame a short-term trade around that, but that is going to be an issue, especially because it lines up with these lows. So when we broke down, we tested the low end of the range. That would be your FTA. And again, what I'm going to put here is KPI, but this is an hourly level. I'm thinking that in an ideal world here, if we pushed up and we reacted from the 69s, we would get back below the 63s, and then we would start to look for a bigger picture trade all the way down to a new low. Now, you might already be thinking at this stage, well, look at the very last little low, which is there at 72s. Back to 63s, there's 9 ticks. Could we grab that little 9 ticks, a bit like you did in the euro dollar yesterday? Get one level to the next, chunk it, and then sit on the sidelines and see if we get a bigger move to get on board? Yes, that's definitely something you want to be thinking about. However, when we come down to the 5 minute, you can see this level isn't naked. Those lows were retested, so it's suboptimal for me. And if you were going to key off this naked price point at 67s, you've got absolutely no room, especially if you want your stop above a thrust candle like this. So it's not going to play out there for me, I can already tell you, to come in short with a blind order. But I am very, very interested in engaging up there again if we trade 69s and get back below 63s. So I can already start to build that into my plan as key levels on the sell side. 134.69. I usually give reasons in brackets just for my own reference at the end of the day why I'm looking at that as a key level. So it's the low of the D1 spike candle. That's why it's important to me. Then I'm going to add price needs to get back below 134.63 to engage on the short side. And then I'll put in brackets as well the potential target for that trade, which is going to be a new low. At the moment, the low comes in at 33.99, so we're looking at 133.98 already. That's telling me that there is a potential big move there. So at the end of the day, I've now got some accountability for myself, because if this hits 69s and it gets back below 63s and I take fucking 5 ticks out of it, then I'm going to look like a right cunt, because look what I've written down in my plan. I'm looking at this to go back to 33.98. So there's accountability there, and that's worked very well for me over the years, just having that concrete plan. Now, I've kept it a little bit vague with exactly what I mean by price needs to get back below. In an ideal world, it will get back below with an hourly close, but if it ramps up there, accelerates into that level, and then gets a sharp 5-minute close back below, I would be prepared to enter it. It's not a rule breaker. So yes, the more higher time frame confluence you get, the better. If it hits it on the daily and closes back below this level, fantastic. Hourly, good, but 5 minutes still acceptable. This plan develops from your main trading plan. This is what we're going to discuss in a later workshop before EFL ends, but you obviously have your trading plan, you have your flow chart of setups, and then they transition into this daily plan where you still need to be relatively detailed. Someone said to me once, mate, there's no fucking way I'm writing down a plan for my market. I've got all this up in my head. I can look at the calendar on the screen. I know what news is coming out. If I've only got to remember 2 levels, that's fairly easy. I can do all that. I'm not writing down some fucking plan. And that's fine. But remember, I'm looking at 20 different markets. And you want to record your thoughts when you're looking at that many different things, because it's very difficult to stay abreast of everything. And also, again, I would encourage, even if you're looking at one market, to not take that attitude of, I'll remember everything, but just jot it down. I mean, how fucking long does it take? It's a few minutes, and it will help you massively at the end of the day to organise your thoughts and remind yourself what you thought. So many people are influenced by what happened on the day, and they forget what they thought at the beginning of the day. So we've got a level to potentially engage at on the upside. Now, again, we can pull in ATR, and look how interesting that makes things. ATR is coming in just above our hourly KPI, key point of interest. So now this really increases the probability of there being a nice potential reaction to the higher time frame level. So that's a done deal as far as I'm concerned. I've got nothing to worry about. If it gets up there, I'm looking to engage. Now, sometimes when you see an ATR level, you can start working back and thinking, if it does breach ATR, could there be a level beyond market that we could potentially get in at? And if we do that with all of these markets that may not even cross ATR on a day, we will be here for ages. So I'm not going to do that. However, what we'll do today is if something starts crossing ATR, then we start pulling the chart onto the screen and saying, right, what's it doing? Where's it at? But you could spend ages planning all these levels that are past ATR, and then fucking price doesn't go anywhere all day. So it's really a question at this point of, as I've said before, where's the no-brainer location to try and trade from? Where is the opportunity that I would be sorely pissed off if it got to the end of the day and I hadn't traded? And that, for me, is right here. If it gets up here and gets back below this level and I haven't engaged, I'm going to be annoyed. So now let's start thinking about the downside. We know that we've got this key swing low, daily swing low, and we know we've got this key point of interest beneath it, and we also can see that ATR is coming in not too far beneath that, and ATR will move up during the day because it's projected from day high. So, you know, every tick higher that this goes, the ATR will move up, and I wouldn't be at all surprised if this ATR soon came in line with this area, making it even more interesting to engage down here. But again, if you come back to the 5-minute chart, because we're looking for a naked level, and you have a look at this area and how price interacted with it, you can see that it isn't naked. There is no key point to take a trade off with a very clear thrust candle that hasn't been retested. This high here at the level was subsequently retested post break. So, broke resistance, pulled back to the LHPB, took off from there. So again, I can't engage blind. And what I mean by blind is just put a limit order, put a stop, think about a target, and just wait. But nonetheless, it becomes a very important area for me to watch. What am I watching down there? I'm watching the 5-minute candles as they trade into it. I've also got my eye on the footprint. So I'll be able to see what order flow looks like, what price is doing when it gets down there. But it's another area that, to my mind, cannot be ignored. Now, if we go back and just think about the daily swing low, someone asked me, would you be prepared to trade an SFP of that? I don't think that swing low is the kind of area where so many traders are going to get trapped and where an SFP would be, a fantastic opportunity. But I think there'll be a flurry of stops going off under there, and that's why I'm trying to pick it up beneath. But an hourly, for example, wouldn't make me wildly bullish. No, I'd be looking for that quick reaction, a pop through there, pick it up underneath, and then just get out again. I guess what I'm saying is that swing low is not setting a directional precedent for me. Again, I don't want to throw too much at you, but if you remember the euro dollar from last night, and hopefully you remember me saying if we break this level here and we close below it, it sets a directional precedent. Remember where that level is on euro dollar on the daily chart. It was the high of this spike candle. Why would that set a directional precedent for me? Because we know the probabilities of it going back to the weekly open. So my thinking was, we lose that, that's going back to the weekly open. We've got the stats behind us, and that's key structure. If that goes, it's over for the euro, at least down to here. So some levels set a directional precedent where you think, right, now I know in all likelihood if that level goes, it's going to X. And again, with Bund, no. That's not the case for me. This doesn't set a directional precedent if it breaks this level and fails here. But I think we'll get a nice little play underneath it trying to pick it up. So this level has to be watched. So again, what I'm going to put in here is key levels in the buy side, 133.68. Why do I like that? It's a potential fake out, let's call it, of a D1 SL. Swing low, not to be confused with stop loss. Although stop losses will accrue under a swing low, so there you go. But again, you can see what's going into the plan. We've got the level that we want to watch, and we've got the reason why we want to watch it or engage there. Now, if I had just put blind orders in, I would have actually put buy it at this level, stop here, target here, and the reason. If I've just put in the price like I have here, that means I've got to watch it. So that's going on in the back of my mind, that I know there's no order in this, but I have to watch. Now, the only other thing I would add with Bund here is people ask me a lot about the market profile because I use market profile. I've got weekly and daily profile levels on my other screens. I only use market profile in terms of how does it line up with the key levels that I'm looking at? Does it confirm them, or does it give me slightly different price points to engage at? I don't consider every single level on the market profile. So again, if I don't mention it, it doesn't mean I'm not looking at it. It just means that it's not relevant. To me, there are two areas that are key in Bunds today. 33.68 below, 34.69 above, so they're nearly a point apart. And I don't really care what happens in between there. Could there be potential trades everywhere? You could even look at this and say, well, hang on, this could be a sell. Should we get short? I'm not that type of trader that's trying to be down in the weeds, picking off all these small price points and essentially trying to scalp it. You can be, and with the information that I've given you on levels and how price reacts around them and given you ideas for stops and targets and statistics, all of these things, you could build a model that would be able to do that. It's just not my preferred way of trading. So I'm very much take it or leave it. If Bund hangs around here today, there's going to be no trades in Bund. And I don't mind that. I'm okay with that. I said to you guys before, and it's probably another kind of throwaway comment in one of the previous sessions, that when I take a position, I'm really taking a position, and that's the reason why I'm okay sitting on my hands for extended periods. Some people are always going to have that feeling in the back of their head of, well, I need to make a living and I've got a small account. I can't afford to sit here, Tom, and do 1 or 2 trades a week. And then you have to come down to a lower time frame or work out a way to find more opportunities. But I wouldn't advise it. I would advise you, like I said before, bite the bullet and say, look, even if it is only a couple of trades a week, build a 6-month track record and then get capital. And then suddenly you'll be in the same position as me. So, with all that said and done, this is how it's shaping up for Bunds. Now, in the development box, we're not going to write anything. We're not writing a fucking dissertation all day. Ain't no one got time for that. We're not going to be like, the candle's going up now, I'm sweating. That's going to be any major developments that occur during the day. And anything that might potentially make us do something that's not in the plan. And then we'll note it down. But as of yet, nothing. No trades taken, obviously, so there's nothing to fill in there. And what happened today is usually filled in by me at the end of the day. And then, did I do well? Did I do poorly? Why? How to improve? And you really want to fill that in for every single market. So I would go through tab at a time and take this and copy it and just paste it into each of them so that all the news data's there, and then just fill this in. It doesn't really take that long, but it's very, very good to have that done. So I'm going to take that off screen for now, but you've just seen an example of exactly how I fill in my plan. I've been asked that so many times on Twitter over the years. Would I still sit on a bid offer if I don't have any expectation bias for the day? Yes, definitely. If these levels above and below market were naked in the Bund, I would sit there despite having no expectation. Because the expectation is where we're going to go on the day based on where I see price now. And I don't know if we're going up here and I don't know if we're going down here. I just know that they're good areas to engage at. Someone said to me yesterday, in terms of the euro dollar, because obviously I got short, wow, how did you know price would go up there? And I had to sort of set them straight and say I didn't have a fucking Scooby that price was going to go up there at all. I just knew that if it went up there it was going to be a good level to trade at. There wasn't an idea of, I know exactly what we're going to do, we're going to run up here and tag this level and react from it. No, it was, I don't know where we're going, but if we go up there I'm hitting that short. It's a great level. And that's the difference between expectation and reaction. Up there I was reacting to price. In dollar yen it was an expectation. So will we get a trade in Bund today? Hard to say, but you can see that both levels I'm interested in are beyond ATR, so we've got to think about, is it likely to get up to either of those levels? And again, you can't always tell, but you can look at the calendar and you can say, well, when's the volatility injection? It's at 1:30 and at 3 o'clock. So it might be a potential trade that occurs late in the session. Obviously, we can move on the UK news in Bund, but I would be anticipating that it's more likely to be a larger reaction to the US news later. So I would think there's not a lot to do there this morning, but obviously that has to go on another one of my screens, and I just keep an eye on it. So I'm going to move that off screen for now, and I'm going to move Forex onto the screen. So now we're looking at the Forex majors. And let's start out with the dollar Canadian. So I'll take the ATR indicator off the screen. So we have a completely blank chart to work with. Hope you're all very happy that I have wiped my charts clean and I can't see any of my levels. Can you explain exactly what you're looking at on the buy side in Bund? Yeah, let's just quickly go back to Bund. Okay. So in terms of Bund, I'm just going to watch what it does down there on the 5 minute. I'll be watching the 5 minute candles. I'll be watching the footprint. And again, you can see a little bit like the upside level. There's not a huge room for movement between 68s and 79s. You've got 11 ticks. There might be something that we can frame there. Or it could be that we come off the 68s, we get above the 79s, and we look for a long back up to, say, this FTA at 99s, which would give us more to play for. So it is just watching the price action. I can't tell you what would get me in until I see it. And then obviously I'll tell you. But I will certainly look at the actual 5 minute candles and the footprint. Hopefully something sets up at one of these levels so you can see, how I engage it. But the story down there is pretty much the same as the story above. We're watching price. So we're moving on to dollar Canadian now. When I look at this, again, I'm doing the same thing as I did in Bund. I'm starting out on the weekly and I'm marking out the obvious levels. Now, we've got this weekly swing low all the way down here. Is there any point marking it out? I mean, it's not going to get there for a while. It's a long way below market, but it's worth just having it. It's the nearest weekly swing low. And then I'm not going to go and mark this out because, I mean, we're not going up there anytime soon. And we could certainly mark it in if we started going absolutely parabolic. What I'm more concerned about is round here where we are in terms of price, and this level's pretty key here, which is these lows. So I will put that as a KPI. It's a key point of interest that we're rotating around. Now, we haven't got any weekly price action here to suggest that we're going to reverse to the downside, or even that we've cleared it and that we're going to push higher from here. We're basically washing it. We're washing up and down through it. But the reason that I put it on the weekly chart is just so I can be aware when I come down to the daily what it looks like and what price is doing around here. So now let's move down to the daily. Now, the very first thing that I think when I look at that chart is what a fucking mess. It's just up and down like a whore's jaws around this level, and it's the type of location which if you trade in you could really get cut up quite badly. This is value at the moment, and be fucking careful. Now, you might remember this is a continuing theme because I'm pretty sure I said on this day here, which was bearish inside day failure, that it is bearish, but I wasn't bearish. Why? Because it was just stuck in this little range and technically it was still above the weekly level. But is there anything on this daily chart that does stand out to me as being interesting? Well, there's a couple of things. The first thing, I'm looking at these highs that have been, I guess, raided is the best word now. We've broken above them. We're rotating pretty dramatically. That sets us up for a potential run down here. Now, am I bearish? Do I definitely think we're going down here today? No. And you might think, well, why not, Tom? You've often said when it breaks the high of a range, it's going to go down here. Sure, but does it have to do it today? If we close where we are now, will I be surprised? No, not at all. We might hit this low tomorrow. Might hit it on Monday. So am I coming in here with a bias, a clear bias for today? No. I've just got an inkling that we are going to take this out probably before we take this high. But that doesn't make me come in today and think this has got to be sold. Already, though, I'm thinking if we do come down here, that needs some investigation on the hourly chart. Now, we won't go and look at that hourly chart at the moment, but we'd be thinking that. So that's a KPI, a key point of interest beneath a daily low. This is a daily swing low so far. DSL, let's put. And now we're fucking annotating the charts. Let's just call that range highs. Now what if it does reverse and suddenly goes vertical? Where are good levels coming in? This should stand out like a sore thumb. We're cheating here because you know I've already got orders in, but I'm pretending that we haven't got any orders in and that we're coming in totally blind, and I'm showing you how to mark up a chart. So that's definitely interesting. And then of course you've got that as well, which is the very last rejection. So you've got your true last low pre-break and the last rejection low. So you know that something's coming in there. And sometimes you might want to pull on a fib and just see, is there some confluence? So you take a fib from the high to the low and you go, fuck me sideways. There's a 50% right in the middle of that killer area. So that's definitely interesting. And that's the daily chart marked up. So is there a weekly bias? No. Why is there no weekly bias? Because I don't know where that's fucking going. I don't look at that and know where it's going within 10 seconds. And that's what I need to be able to do to have a bias. That's what I want. You might not need to be so convinced, and I'm not saying it's the right way, but if I can't tell, there's no bias. So daily, is there a bias? No. No clear bias. There's definitely a feeling, though, that we're moving down here before we take out this high. I already know that I'm probably going to just miss that, and it will be a call. I'm using air quotes here. A call that I probably won't capitalize on, because I know already, without even coming down to the hourly, that I probably don't want to engage in the middle of this horse shit here. It's just a mess, and those types of trades I've been cut up on before. So this may well have to prove my call good without me making a fucking penny from it. And again, I'm okay with that. But I'm thinking about this point, and I'm certainly thinking about these up here. So now it's down to the hourly, because we've mapped out weekly and daily. So we can think very quickly about the higher one, although we are not getting up there today. But is there a naked price point at these two levels? And if we really zoom in there, we can see that the naked price point, the price that hasn't been retested, is here, this low. It's close to our true last low pre-break on the daily, right there, off of that low, with the 50% confluence coming in 3 pips beyond it. So it's starting to be a killer area. Where would I want my stop on that trade? Certainly not above the thrust candle. Why not? Because I'm stopping out right into the big fucking level. So it has to go beyond that. Where would I really feel secure with a stop on that trade? Ideally above this candle. I don't know if it totally closed through this low. It was pretty close to it. But a stop up there feels to me that the market wouldn't be able to hit that easily, because you have got a fucking brick wall of confluence. You've got ATR, you've got a huge level on the daily time frame, and the 50%. So if we get through that easily, I will be gobsmacked. Going back to my philosophy on trading, if I get stopped out, I want to be surprised. I want to be like, wow, I fucking didn't see that coming. Not, my stop in a shit place. So the trade gets framed like this. The short goes here. The stop goes there. Where does the target go? Let's drag this forward. The target, just off that inflection point between support and resistance. I am more focused on the hard right of the chart, but I don't think this is going to be the FTA if and when we get up there. Price will probably, if it gets up there, fake it out, make a bit of a swing high, even if it carries on up here, which will mean eventually, even if you start out with a target here, it will probably end up at least there or possibly higher. So that's how the trade is actually set up at the moment. Those orders are in the market. Now, what have we got on the downside? We know there's this KPI down here, which is a good level on the daily time frame. If we remind ourselves what it is, it's the high of this day prior to the thrust up and close above this swing high. But it's not naked on the hourly, and that basically rules it out as a trade for me. If it's not naked on the hourly, I'm not taking it. However, I like this here, this last high pre-break. So we're not really using that KPI to frame a trade. What we're doing here is we're just looking at a naked price point. I haven't even put ATR on, but I know it's going to be fucking miles past it. And there's structure there. There was previous resistance over here, flip to support, flip to resistance. A level like that, when we're so far past ATR, is very, very likely to hold. I already know I'd be prepared to come in there with a tight stop and a fairly tight target and not overstay my welcome. We're not looking for any major reversal there. This trade is set up like this. Buy it here, off this high. Stop underneath the thrust candle. Target this low. Why that low? Because when we broke up out of this resistance, this was the last pullback low, and it's pretty significant. There's a long wick on that. And already setting that trade up, you're looking at a 1.67R. When I put this order in, so many people asked me about this and said, do you not want to go off the high of the spike? Isn't that what you usually do? Sometimes when you refine things that much, you're going to miss the fucking trade, because think about how far past ATR we'd have to be to even get down there. And you're talking about you want to buy at 35.03 versus 35.05. It's 2 pips. If you want to risk missing a trade for 2 pips to get the absolute perfect entry, be my guest. Once we've done all that, you can put your ATRs on. And you can see in terms of high of day, we've already gone past our ATR to the downside. And it looks like we're going to attack this low. That doesn't mean I want to short it. There's no way I'm getting involved in here. I'll leave that to a different type of trader to me. I am sure as hell fucking steaming in long if we get down there. That's a mean reversion trade. Same above. Naked price point, mean reversion trade. Now, I'm not going to get in the business of grading levels with you, but if you could only keep one of those orders in, which do you think is the better trade? Which trade would you be most confident in taking? Or you might trade a totally different style to me and hate fucking both these trades, but which trade do you think I'd be most confident in taking then? The upper one, you're right. Everybody's saying the short. Definitely. That short is a fucking killer. So that is the real A grade setup. Now that doesn't mean that I'm not prepared to take the lower one, but again in the back of my head I always have these grades of how good a trade is, how much confluence there is at a level, and over the years that's kept me out of bad trades, because you should be able to tell, is this a trade that really looks like it can work, or is this just a bit of a punt because I need some action? So again, that's now the second market that we've looked at where we've made a full plan, drawn on our levels, we've got a market map, we know where the key points of interest are, we know where the range highs are. I think I didn't annotate every single level because I usually only do it when I'm teaching. I'm not really used to annotating every single thing, but let's just annotate these two for the sake of being thorough. That's our DLLPB, last low pre-break. Then you've got another one there. I didn't want too many levels on the chart, but you've got that there, which is the DLLPB, and I'm going to put true. Again, what I mean by true is if it's a swing low, I call it the true last low pre-break. But that doesn't always mean that's where I'll trade, because there's often a last low pre-break where you see some significant rejection. But here you can see two more or less on top of each other, and as it happens, if you have a look at the trading view tool, I am actually entering at the true last low pre-break, but I'm making sure that my stop's above the last low pre-break that's above it. Okay, so again with the theme of keeping those stops out of the way. So if I was to go ahead and fill in a plan for this market, then as I bring that onto the screen here, you can see that we've simply cut and pasted the day and date and all of the news. Weekly bias, neutral again. Daily bias, neutral again. Expectations, NA. Don't know where it's going. Don't know. I did say I think it's going down, but that's not a clear expectation. And I'm only going to say this for the last time, so I don't want to bore everyone. An expectation means I'm certain. I'm certain this is going to this low, and I'm not. If we don't go any lower than this now, and we close back in the range, am I going to be gobsmacked? Am I going to go, wow? No, not at all. That means I haven't really got an expectation. A little bit of a feeling is not a clear expectation for me. So where's the key levels on the buy side? The key levels on the buy side are 135.056. Nobody's doing pipettes, so it's 135.06. We're going to call it that. And why is that a key level? We're going to write it down so that we remember it's past ATR. So that's one reason that we're taking it. And it's a last high pre-break on the hourly time frame. Those are the key reasons that we're taking that trade, or that I'm taking that trade. So it's a big extension of ATR for the mean reversion play, last high pre-break. There's nothing else really going for it. You could say, well, it's coming off a daily level. It's not. It's lost the daily level if we're buying down there. And in fact, we're getting into the trade way below the daily level and getting out before it's even fucking tested the daily level from below. So there's nothing else going for it other than that. But it's still a great trade. What's the level up here that we're selling? It is 136.875. So it's 136.88. We're just going to round it up to make it simple. What has that got going for it? That is past ATR. That is a last low pre-break on a higher time frame. You can put HTF for higher time frame, which I'll put. That is also the 50% from high to low. And already you can see that there's more going for this than there is for that. Just take that off because that's the pass symbol. So there's more going for the sell side than there is for the buy side trade, but I'm prepared to take both of them. But again, you can see the plan developing. I'm pretty neutral coming in, but there's key levels on the buy side, there's key levels on the sell side, and we wait and see, are there any developments? It's very easy if you only trade one market to become enamored by everything that it's doing, because you want to trade. And this is why I don't just trade one market. Imagine dollar Canadian was your only market that you could trade. You would be sitting here thinking, fucking hell, mate, what's the chances of it even hitting this today or maybe even tomorrow? I'm going to have no trade for 2 days. I got to find something, man. I think most traders would be better off isolating the really big no-brainer trades across more markets to compensate for the fact they'll be trading less frequently. Once you understand price action and how price moves, it seems an absolute sin to be focused on a market like the Bund, which might be in a range when dollar yen is screaming, somebody click the fucking mouse and buy me. So that's the CAD. Now again, Bund, got that on my other screen so I can see where it is, and I'm not being influenced by this. I don't look at this and think, okay, look, we made a little 5-minute high, we sat on it, we're losing the 5-minute high, is it going to come back there to that little inflection point and sell off and break this swing low? I don't give two fucking shits whether it does that or not. It might do, but I want to engage at the big areas. This is not a big area. You might be able to squeeze some ticks out of it. You do that, I'll do me. Is a bounce from a hammer high a clear bias? Yeah, it is, especially if it was a tradable hammer in the first place. This dollar yen would have been a very, very clear bias. In fact, let's do dollar yen next. The daily plan, by the way, I used to jot stuff down on a notepad, but this layout that you see on the screen pretty much came from Prop. They gave us something very basic. I've posted it to Twitter before, and I kind of built my own spreadsheet. I'm not an absolute whiz with Excel, but just built something basic that was very much based on the plan. It really does help. Honestly, if there's a few tools that can really help you, I mean, obviously a journal, but the daily plan and your Demon Finder is really, really key. Demon Finder, probably one of the most important because it highlights mistakes very quickly. I've got a Demon Finder still And I rarely fill it in these days because, as you'd expect, after this long doing it, I don't make many mistakes. But if I notice that I have made a mistake, then I put it down and I've got a paper version in front of me on my desk. It's so important that it's not even on an Excel. It is printed out and it's on my desk. But right now it is completely blank. I haven't filled anything in the Demon Finder for a long time. I couldn't tell you the last time I filled it in because I really don't make mistakes. Sometimes something happens, like, you take a day off because you're tired, and then you look back at the end of the day and you go, oh, there was a great opportunity I missed today. But that's not a mistake. That's my process. If I'm tired, I'm not fucking trading because I know I probably won't be engaging with a very clear mindset, which I need to be in order to take the trade and manage it. So I don't consider that a mistake. A mistake is you over leveraged on a trade, or you saw a great idea and you had conviction in it, but then you shat yourself or something like that. So it's pretty rare for me to make a mistake, but my process is nailed down super fucking tight now. So weekly time frame, dollar yen, what have we got here? We've got the low that we've put in here. And above market, the next real point of interest is this low here. It was a very important low, and again, remember that we stopped on this week there. So we're above that now, but we are aware that that's there, and we've got this as well, which is this key low over here, where again we stopped. There's really three levels that are quite important to me there. If we wanted to bang out a fourth, the high of current week is quite important because of this low over here. So you can see that we've just got rejection coming in that area. So we're trading with these levels in mind. So this is a weekly swing low. Again, this is a current weekly swing high. Hasn't actually made a swing high because it hasn't made a lower high the week after, but it's a swing high at the moment. And then these two at one point were swing lows, but now I'm going to call them KPIs because price has traded through them. So key points of interest. Any clear bias on that time frame? No. Daily. So we know where it's been. We know where the trade was. It's a bit fucking late for that now, but thankfully we analysed it at the time. We flushed these lows. We put in a swing failure and a hammer. We thrust up after the hammer, we pulled back to the hammerhead, we reacted and made a new high. If you want to screenshot something as an absolutely beautiful example of a daily bias, of what I really want to see to get a runner, this is exactly what you want to screenshot right here. This is fucking picture perfect. It's a dictionary definition of a great daily bias. You've got, again, the flush through the lows, the hammer, the SFP. Remember, the play here was to try and get long after that hammer formed for the initial move up to 70s. Then you get out, then you look to rebid if it returns to the hammerhead. We've covered that before, how I always, back in the day, used to do the same thing, which was get in as it breaks the high of the hammer and look for this to go absolutely fucking ballistic. And day one, post hammer, there it goes. I'm on side. I'm absolutely killing it. Get that fucking stop up to break even so I can't lose. What the fuck? I've done my arse. It's moved back to break even and then gone to a new high. You son of a bitch. I can't make this work. I hate trading and I'm never going to make it. And that's what happened to me all the time. So take the first play to the FTA, get out, get back in when it pulls back. So in light of that, did we buy a pullback to the hammerhead yesterday? No, we didn't. I was shorting the euro dollar. I didn't want too much exposure, but you'd certainly be aware of it. If you weren't in euro dollar, you would have been potentially looking for this play, which is the pullback to the hammerhead, at which point you're looking for the long. Now, just to cover that in slightly more detail, where was the hammerhead? It was there. On the hourly, when you look at that price point, it's not naked, is it? When it's not naked, what do? You refine it to the nearest naked level above or below. Now you can either go significantly in front of it there, which I think is a little dangerous in light of this interplay between this high and this low. So you want to go below, and you're looking at that. Now some of you might say, and I think we covered this yesterday, hang on Tom, what about that? I can refine it right up to the last high pre-break. And remember what I've told you, that if you've got a cracking level here, you want to get in as close as possible to it as you can. You're trying to be almost a prick for a tick here. Well, in fact, it's a prick for 6 ticks. And it's not ticks, it's pips. So I'm the cunt here. But it's 40.74 versus 40.80. You're talking about 6 pips to potentially miss the entire move. Just pay up those 6 pips. We're here to make money, not post a screenshot on Twitter after and go, I didn't even go 6 pips offside. It's just about making money. So what's the play there? The interplay between this high and this low. This is your FTA. Your stop is underneath that thrust. So you're looking at a trade that looks like this. Buying it here, getting out there, having your stop underneath that, 1.6, and chunking it. Okay, important to chunk it because you know it's coming off a daily time frame. You know it's probably going to go up here, but I'd rather have the first bite of the cherry, especially over news where everybody can get stitched up, and then wait and see if you can get back on it. In this case, there was no opportunity for me on the hourly because I don't come lower. The first play is the one that makes money, then it's gone straight up. Many times it won't, and it will give you an additional entry to be able to get back into another trade to take it for the next run. But you've got to be careful over news, especially news like FOMC, CPI, stuff like that, because there's usually some fuckery going on. And even if they don't run the stop initially, they'll run it potentially afterwards. By they, I mean other traders. I used to work with a guy that used to literally run stops in the ags himself, single-handedly. He used to basically force the market through key areas with size. So you can certainly bully the market if you've got some size. Again, going back to Nav, with his fucking algo that he built that was essentially spoofing bids and offers and causing chaos. And you think back to the flipper, Paul Rotter, back in the day. Certainly when you've got size, even if the orders aren't getting executed and you're just using margin to put orders in, there is a certain amount of bullying you can do because algos see other algos and react off of them. And that is happening. I mean, I saw it in front of me on the floor. So it was interesting to watch. I've gone off on a right fucking tangent now, though. So anyway, going back to this trade, if you look at the play here, look at the 2 levels, look at where you should be really getting in and where you might refine it to for the last high pre-break, and keep your eye on the FTA, and you switch that to a 5-minute. And you see what happens. It trades into the first level, doesn't hit your last high pre-break, straight to the FTA. If you're bid down here, trying to get that absolute precise point, and you've got your stop there, you've puked the low. You've completely done your ass. And if you've studied my material before, you'll know that you shouldn't really be bid down here, especially if you've seen it hit the FTA, because if it gets close to your level and moves away to an FTA and then comes back, you want to stand aside, especially over a key news event. So you really shouldn't have been bid there, in my opinion. If you were bid there, you had to be pulling that when it came back down here, because it's had that move up and back. And it wasn't that quick, there's no excuses, because you had a good 15 minutes to see that it's pulled back there. So it's pulled back, hit the FTA, another 5 minutes has passed, then 10 minutes has passed, and then you're getting filled 15 minutes later after it's rotated to an FTA and coming back to the downside. No excuses for being caught there. It's all about not getting caught. Okay, you're trying to take other people's money, not put yourself in a situation where they might fucking take yours. So back to the daily chart. Where now for this? Don't know. And I'm okay saying I don't know. The easy move has been done. Hammer, thrust, pull back to hammer, high, moves to a new high. Up here, Yeah, it's taken out the last little swing high, it's rotated aggressively off it. It's still very early in the day and we've got news to come out. The candle at the end of the day probably won't look anything like this. So it looks pretty bearish at the moment with that rejection, but there's no clear bias there. I have no idea where that wants to run personally. So down on the hourly, is there anything that I really like the look of? Again, you can throw on your ATRs and you can say, well, we're already at downside ATR. We've crossed it. We're coming back above. What's down below market? Let's get some of these levels off the screen. And let's just annotate that. Head of hammer, HOH. I love these acronyms. They should make their way onto Twitter. Just put HOH. No one will have a fucking clue what we're talking about. It's the HOH setup. But yeah, so if we're past ATR, is there a naked level to lean on? Nowhere. Absolutely nowhere. So there's nothing to do here on the downside for me in dollar yen. And on the upside, is there anything to do? If we start extending here, are there old highs above market? Yes. That looks interesting already. Where have I got that from? Through all the highs of the range, this high, these highs, even that little last high, big thrust up there, mean reversion trade into the last low pre-break. You've already got a clear thrust candle stop on that, and even to there, it would look like a potentially good trade. I can tell you I'd want to short that there. The short would be there. The stop would be above that candle. What does the target look like if we're using this target here? It's already a 1.54, job done. It's that simple. Would I play it to here? There's no need to. Look at this high here, look at these lows over to the left. Just take the easier money. Now, sod's law, one of these trades I'm going to call is going to stop out. And you're going to go, you're saying it's the easy money, but over time this is such a consistent high probability setup. And it relies on you just identifying a key level and refining it. I think I said in one of the early sessions, you'd be quite surprised that you can build a career off this when you see how complicated people make things. Now, I haven't built a career off this one setup. I've got a lot of different setups, but this is a killer one. And you can see it forms the foundation of when I'm analysing charts and I've got no bias, I know that will be a potential opportunity. Now, I could go ahead and put that in the book right now. I'm not going to. I have done with the dollar Canadian. The only reason I'm not putting this in the book right now is because I can't be asked. Because I want to go through and I want to analyse some more markets. But I'm going to keep the trading view tool on. Rest assured, if that started going vertical, that order is going in very fucking quickly. But I like to tell you exactly what I've got in the book so nobody gets caught, and right now there's not an order in there. It will definitely go in. I'm not waiting to see what price looks like or anything like that. Why have I chosen this? It's the FTA. If you're short here, it's the very first price point which we could find support at, and it's the inflection point back here. Prior support turned to resistance. Now, why this level if there's not a daily KPI? Where's the higher time frame context? There doesn't have to be higher time frame confluence. When you're doing a mean reversion trade, there has to be a good level, and it has to be considerably past ATR. And we also like it if there's the potential for a forcing point ahead of it. These are all forcing points. The market gets up here, traders will come in and see that it's making a new high, it looks bullish, and it's likely to push through that. And we're looking to basically take the other side of traders that might be very late executing up there on the long side, or maybe people have shorted up into this area thinking that the resistance is going to hold, and it starts barreling up here and they're like, fuck, I'm totally wrong, I've done my arse, and getting out right into the point where we're taking the other side of their trade. So yet again, when I would be filling in my plan, it's going to look like this. I'm going to bring it onto the screen. Again, we've got our news in. Weekly bias neutral. Kind of sidelined based on where we are at the moment. Expectations for the day, NA. Don't know what it wants to do. But we have got a key level to the sell side, and that key level is coming in at 44.86. So key levels to the sell side, 144.86. And what are the reasons that 144.86 is the trade we want to take? It's an extension of ATR. It's an H1 LLPB. And it's also worth noting, if you just want some extra clarity, that it is beyond range highs. The more information you can give, the better for when you look back on this at the end of the day. So you can see 3 reasons potentially coming in up there. Acceleration through this area, into the last low pre-break, significantly past ATR. That's a good point. When you come in tomorrow, do these levels stay in? This is what your plan's for. You pull up your plan and you go, yesterday, that's why I wanted it up at that level. How many of those things have changed? Let's say we move up today and we close around here. Well, a move up there would still be beyond range highs. Great. It would still be at the hourly last low pre-break. Would it be beyond ATR? If it's not, then where is ATR coming in? Now imagine ATR was suddenly here right at your stop. Well then no, I'm not taking that trade. I'm not fucking stopping out into ATR. What if ATR was a little bit beyond the area? Like here, a couple of pips beyond where you want to sell. That would still be fine. As long as it's comfortably in front of my stop, I still think that's a good area. So it's always good to have an idea of what you thought yesterday and has the plan changed. This is what I thought yesterday. Where's it trading today? Has anything changed? Do I see anything today that I didn't see yesterday? And that's another important point, because sometimes as much analysis as you do, you might miss something. Okay, someone's asked to look at crude oil, so I'm going to bring on crude oil. Alright, so crude oil. Again, what you can do with crude here, if you want to just see more data, is you can actually put it on just CL1, which we'll put it on for the purposes of analysing. But we're only really concerned with what's going on around current price. We're not obviously worried about all this historical action because we're in the middle of a recent range. So what have we got here? This swing low, clearly, and you've got that low there, which was interesting, but this inflection point here is more interesting to me. I'm going to put that as a KPI. Now, the reason that's more interesting to me is because I'm looking at the interplay between this head of the weekly hammer and this swing low. There's 2 other points that interest me there. You've got that low that we've crossed, so the low of this spike, and then you've got that low, which is the low of this shooting star. So there's several levels on that chart that are kind of framing my thoughts as I'm looking at it. And I'm just going to put, again, low of star, LOS, and this again I'm going to call another KPI. You can go ahead and refine that level to the head of the hammer on this time frame, although I won't yet. I'll put it on the daily. Now, here you can see the level above market still on the daily time frame is naked at this price point. So that already sort of jumps out to me as a possible sell. The lower KPI, which is the 69.32s, the head of the hammer, is not naked on the daily chart. In fact, you can see we broke up through it, we've tested it, so we've washed that level on this daily time frame. That doesn't mean I've completely lost interest in it. It just means that the first thing I'm thinking about is this for a possible mean reversion trade. Not really thinking about that yet until I get down to the hourly. Now, the other thing to note is that yesterday was an inside day on Monday. Could we possibly get inside day failure that could set us up bearish? Possibly. Is it a great location to see inside day failure at? I don't really think so. Overall, the weekly shapes up as feeling somewhat bullish to me. Now that we've taken out this inflection point, we've taken out the high of the hammer, I can see this trading up to the low of that shooting star. I can see us heading towards that quite clearly. So if we got bearish inside day failure today, might it pull back a little bit? Possibly, but you'd have to be aware of, this KPI that might mean that it can't even get to the other side of the inside day lows. So yes, it could happen, but no, it wouldn't really excite me. Let's move down to the hourly and see what we've got. Now again, in terms of the weekly head of the hammer, it's not naked. So I can't just come in and put a bid there. I already know that. There is a possible naked price point in front of it, but that's 50 ticks in front of it. So not ideal. Might something develop down there that looks quite bullish, or something develop next week on the daily time frame down there? Definitely. We can't rule out that something might develop down there, and we know 69.32s is key. So if you're going to watch any level to the downside, that's where you want to watch. But as it stands at the moment, there's nothing doing for me. So what about on the upside? If we're coming past ATR, this level up here, you can refine to this low. And you could start thinking about, if I was to short there with a stop above the thrust candle, that's a trade that could potentially work in line with what Tom does. The issue I've got here, the very first thing that's standing out to me, is this little fucker right here. Now we may well rotate further than that, but I just don't like those kinds of trades where you've got a level and then you've got an inflection point before you've barely even got on side in the thing. And if you were keying off that high as a target, you don't even need to put the tool on from TradingView to know that your risk reward is going to be absolutely dog shit. So that puts me off that. Now, might we get a reaction from there? Yes. But again, what I'm looking for is a really clear level like that on top of it offers a good risk reward. And I just keep going until I find it, because they're there. We found one already in dollar yen. We found two in dollar Canadian. They're there. So we don't have to force anything here. So it is a good level. Make no mistake, that is a good level. And if you're down on a lower time frame, can you try and get something back from 72.04 to 71.82? Sure. If I was on a lower time frame like I'm trading on the Bund, I'd be looking at that. But from an hourly perspective, it just doesn't really say, Tom, if you don't take that, you are a complete mug. What a fantastic trade. Look at all the room you've got. You've got a great R. No. But it does tick a couple of boxes for sure. It's past ATR, and we know, because the level is red, that it's a weekly level and it's a key weekly level. Does that mean that that level's now done? Just because we're not going to crack it blind for a mean reversion trade, that we're never going to get anything off there? No, not at all. Imagine it forms some pretty bearish daily PA off of that level. Then suddenly you've got higher time frame, daily price action, indicating a possible short off of a huge weekly level. Hell, we could be coming in tomorrow or next week suddenly with a bearish bias short crude. So we don't know what's coming, or I don't know what's coming yet. I've just got to think about, do I want to sell that blind there? And I don't. So when Angela said to me, can you go over some markets that you're not interested in? This is an example of a market I'm not interested in. Normally, if we look back at prior live days, you'd never have heard me talk about this crude. But if I don't cover it, it's because I've already done the analysis and I don't like it. So now I'm trying to explain why I don't like it. It's essentially the risk reward here. I think it's a suboptimal risk reward in light of what's being offered elsewhere. And I don't need to trade. Like I said to you before, I don't want to trade. Sell me something. Sell me something fucking good. Sell me something that I cannot turn my nose up at. There's so many other opportunities that will be better. I might have to wait a day longer to get them. But they're better opportunities with a clearer risk reward and a level just as good. Let's move on to BTC. Okay, weekly chart, BTC. Where's the next level above market? It's this weekly swing high. Now, again, I have to really reiterate these things. Just because that's the next level above market that stands out to me doesn't mean I think it's going there. It's just there. And the one below is here. I don't know if I'm keeping up with annotating all these, but weekly swing low, weekly swing high. Nothing really else to say on that time frame. Have I got a clear directional play of where I think that's going to go? No, not on this time frame. And again, to have a clear directional play, I need to be able to say, yeah, it's so obvious where that is trying to go for. And I can't say it. daily time frame, what's happening here. Now this actually feels a little bullish here. Not massively, don't get me wrong, still no clear bias in mind, but it feels a little bullish simply because we had this swing high, the market pulled back, popped through that swing high, failed there temporarily, and then we had quite a sharp pullback that got picked up and we closed at a new high right through the range highs. Because of that, it does feel somewhat bullish. I also like the fact that you take these highs over to the left on the BTC chart, and this is a daily time frame, so we'll mark that in orange, and we're currently above those as well. So it really does look quite strong here. Now you've got these little lows here, but I'm not concerned about them because they're a Saturday and Sunday, so I've pretty much ruled those out. But these were intra-week swing highs. That one was certainly on a Wednesday, and that one was on Wednesday the 21st of August as well. And we're above those. So it feels a little bit bullish. What does that mean? Does that mean I want to get long? No. It means that I'm not really thinking about a short side. The one thing that I would be thinking about here is that to the downside. If we did pull back, what does that look like on the hourly? Again, I'm going to call it a KPI. This one would be a KPI as well. The only reason I'm calling them KPIs is just because they stand out to me as key points. So I want to come down to the hourly and I want to see what 61,373 looks like. We move it down and we can see that we've got these more or less equal highs. The level is naked and we've got a clear thrust. Interesting. But, and here's the but, if we get long off that, we've got this potential problem straight away. And I can't ignore that problem because I've just told you that I don't really have a clear bias. You know, I'm a little bit bullish, but there's no bias that says this is very likely to run massively higher, so I can largely just ignore this level. So what does this mean to me? It means that I'll keep my eye on this level, and if I get some interesting hourly price action off this level that then recaptures that, then that would certainly be a play that I would potentially be interested in trading. So what could that look like? It could look like a bullish engulfing on the hourly that comes off of here and closes above that. Then I might buy a return to structure. So if it closed right off that, I might come in and say buy this high. It's hard to say what it's going to look like if it indeed does come down here and gets back above that level, but that's the first thing I would like to see. So I'm not going to ignore this upper level because I am not biased enough to ignore it. In actual fact, I wouldn't be totally surprised if we moved back here, bounced off here in the short term and then ran into that and then rotated back to this and basically fucked around between these two levels for a few hours. Now that's a useless bit of analysis because I don't intend to trade that, but I'm just trying to explain why I don't want to get long. I'm not convinced we'll get out of here easily. So I might be wrong. Let price prove itself to me and then maybe I'm going to take a position. It's got to sell itself. ATR's all the way down here. No clear levels really beyond it on the downside to buy. On the upside, again, the same kind of thing, but we are getting very close on upside ATR to this weekly swing point. When we see that, I tend to zoom out and think, is there anything beyond that that could be interesting for a sell? And actually, if we zoom in over here, have a look at this. You see that level there? With a clear thrust through it. That looks interesting to me. It looks very, very interesting to me. Why? Because it's past ATR and because you've got a potential trap again. Who isn't going to want to be long Bitcoin if it goes through those highs? Especially if it takes out these highs as well. Again, it just becomes a forcing point. A lot of people that look at charts will look at that and see that as a level that something has to be done at, whether it's to sell or whether it's to buy there. Like I say, it's a forcing point as price advertises around it. So that's a typical mean reversion trade that I would look to play. Again, is it worthwhile from a risk reward perspective? You know, if we went in there and we said, look, we're going to try and short it there, Yeah, it'd be a 1.2R. That could certainly work. That's an order that could go in for me to sell Bitcoin up there for a quick reversal. Why have I chosen this high for a target rather than that high? It's just the inflection point. It's the low end here, the high end there. Targets can often change, orders can be pulled, as you know by now, but I like that. I think that looks like a good trade. That's another order that's not in the book that would go in the book, along with dollar yen, which is also an example of a trade that we've looked at that I haven't actually put in the book yet. So far, that would be my only play in BTC. So you can see that these mean reversion trades are frequent. Every single market you look at can have a mean reversion trade in it, because you're looking at ATR and picking a level beyond it. However, as you saw in the crude oil example, not every market is going to have a trade that looks good from a risk reward perspective, and some levels, like we saw in the dollar Canadian, look way better than others. So you might have correlated markets, but one of them is a real standout that you need to think about trading. So no bias in Bitcoin, and that's okay, because our last bias was an absolute fucking killer. You know, we had the last low pre-break on the daily, breaks through it, gets back above. What do we know? We know it's going to come back to test the last low pre-break, because it does this all the time. And that was an absolutely standout bias, clear as day. So you're not going to have biases all the time, and the last real bias for me in BTC was on this day. Now it's just a question of waiting and seeing what occurs. I think if we do get a pullback into this level and it looks right, so we pull back into here and get above this, I think there's the potential for us to run at least to this high, another test of the high that's put in place before we pull back here, if we do. So I'd think about it at least going here, which is our next KPI. And I know some people will be, again, looking at that and thinking, don't you think we might go up here? Yeah, maybe, but I want that quick, easy play. I let everybody else jostle for these longer term positions. And you can see there might not be a lot in that. You know, we hit this, we get above that. It's not a massive amount of room to that. It might be just over a 1R, but that's fine. Just rinse and repeat. As long as I can get somewhere between a 1 and 2R at high probability, I'm absolutely fine. And when the 4R comes along, fantastic. So it's watch and wait time. Aren't you worried about the fact that BTC tends to have bigger moves and your stop is very close to the entry? Mate, have you seen the precision of my levels? No, I haven't got a stop in it yet. So no, I'm not worried, because I'm not talking about buying here with a stop underneath there. I'm talking about watching price here and seeing what we get on the hourly. We'd have to hit that level and then have a full hourly candle print. And that hourly candle has to close above here for me to even want to get it. And then yes, I would probably use that as an extreme candle to put a stop beneath. I'm not worried about the tightness of stops in BTC, no. As long as it's out the way of structure, I'm absolutely fine. So dollar Canadian falling out of bed, we might get a fill today. Well, we won't now that you fucking said it. That's the low. Fuck, I need to buy it now. That's always the turn. When someone's like, shit, look at it go, it's going. That is definitely going to be the turn. Like I said this morning, I do think we probably will take out this low. I don't think we'll get a fill on this today. I really don't. But if we do, I'm taking it. There's no doubt I'm taking it. I think what's most likely, and I'm not firm enough to put it in my expectations box, but I think what's most likely is we run this low and then drift back and close somewhere above it. I think that's the most likely thing that I could see. When do you add to a position? When I honestly feel that I've got the market by the balls. Bitcoin was a good example of that, not of adding because I didn't get a fill, but when we had this opportunity down here, last low pre-break, took it out, comes back to it, and the long opportunity was there. When we broke up here through this high, I had moved my stop underneath that thrust candle and was on the bid trying to buy more. We had inside day failure in play and we'd come off a big level. And on that candle there, you absolutely know you've got that market by the balls. And I'm sure someone's thinking, oh, easy for you to say now, mate. But go to my replies on Twitter. And someone was talking about that trade, and I literally replied to them at that time and said, you've got this by the balls. Because it's just very clear at that point that shorts are about to get fucked. So you've got the long, you're nicely on side, your stop's now a decent profit stop. It's just about adding more. There's lots of different ways to add to trades. Let's labour that point just for 2 seconds. The trade here was getting long as it broke the high of this candle, stop below the low. If you've moved your stop up under there, which is where I had mine, you can see that you're up over 1R. So if you took another position here with the same risk as you used down here and you stopped out on it, then you're going to lose 1R on your second edition and you're going to be up roughly 1.29 on the first position and you're going to be slightly ahead overall, which is a kick in the nuts if you get it wrong, because you were up comfortably and then you're coming out with probably a little bit better than a scratch if you get it wrong. Some of the guys I work with would add even more aggressively than that, and the way they would do things is they would take the amount of risk that they're up on the trade and add in that exact same amount of risk. So basically, if they are stopped out, it is a scratch. As opposed to, okay, the second position stopped me out, but the first position covered it a little bit, so I'm a little bit up on the trade. And, in this example, there's not a huge differential, but, imagine if you're like 5R up on a trade and then you start adding, they're taking all of that 5R and adding it into the trade. So if it goes wrong, it's, oh shit, I've given back all my profits. If it goes right, it's really going right in a big fucking way. That's very aggressive though. Right, what market are we doing next? Let's do the DAX. We've still got an area down here. I haven't got that in the book, but I'm prepared to engage at that. Fucking hell, that was from one of our early lessons. Oh, look at that. 61% fear, blast high pre-break, past ATR. Clear as day, isn't it? It's absolutely clear as day. Now, again, put that on the continuous. Just for now. You can use the front month if you want. But again, a clean chart here. Key levels here. The big high, obviously. Weekly swing high. And the one just before it as well. That high there. Important. Then you've got the weekly swing low. Can anyone say inverse head and shoulders here? And then that as well. That is absolutely critical. If that doesn't fucking bounce off of there when it visits it one day, I'll quit trading and become a fucking bus conductor. And you've heard it here. I really shouldn't say things like that, but that's how we're looking on the weekly time frame. Is there a clear bias here? Well, there's definitely an inverse head and shoulders there, in my opinion. It's a bit of a lopsided one. But again, no clear bias. Do I think it's going to reach for this high and take it out? Yeah, it looks like it. But feeling bullish and me wanting to steam in and take a position at full size are two very, very different things. But yeah, it feels bullish. Daily time frame hasn't taken out yesterday's high, which we can mark out. And we'll just put that as the DSH, daily swing high. But it's not a daily swing high because it hasn't made a lower high. But it's just a frame of reference ahead of this big high here. Now, again, have I got a clear directional bias on this? No. It seems to be almost a given that we're going to take out this high and probably reach for the one beyond it. But it isn't something that I'm going to say that's an absolute no-brainer. I would say that's usually something that I'm going to have no interest in. I can almost tell that there's going to be no interest in this for me when I come down to the lower time frames, because we're in a kind of no man's land on that daily time frame chart. So this is why a lot of the time when I look at a market, I just think there's nothing to do. A lot of people might look at this and they'll pull things out and say it could do this, it could do that. But when you've got very clear levels in play in other markets, they're the ones that are taking my interest. When you're analysing charts, in my opinion, you have to be very quick to say, I can't see something or I can see something, because if you aren't quick, you'll spend too long analysing something and missing the action elsewhere. And that's why I always try to get you guys very focused on where do orders need to go in. Orders need to go in the Canadian dollar. Orders might need to go in the Japanese yen. An order might need to go in BTC if it sets up right. So it is about just being aware of where the opportunities are. So it's 10 o'clock ledges. I'm going to leave it there and be back at 2. But again, at the moment, just to remind you where we're at, I have got an order in, again, below market in dollar Canadian here, above market in dollar Canadian here. I will be putting in an order in the dollar yen if it gets near to that. I haven't got that order in at the moment. So that's what's on the radar for now. And then in Bund, we're looking at levels above and below market, but we're waiting to see what price does at these areas, as opposed to putting orders in at the moment. As we discussed this morning, that's not something I want to do because the levels aren't naked, but there's certainly points at which we could get a decent reaction around. And then we've got Bitcoin potentially on the radar as well. Will something set up today? Who knows? We'll do analysis of other markets when we get back, but this is why I call out these levels, because I don't know when they're going to set up. So I will see you guys at 2. Cheers, ledges.